All right, everybody. So here is the watch list for the week of Sunday, May 5th. We don't have that many great events on the economic calendar this week. It's nothing that I could really look at and say, oh yeah, I'm waiting for this day to trade, or I expect crazy price movements on this day. It's not really much, unfortunately. We got some Fed speakers on Monday, Fed speakers on Tuesday, Wednesday, Thursday, and Friday. All week is a bunch of Fed speakers, and usually that is a choppy week. Usually, hopefully, we don't get that. But historically, when you have a bunch of Fed speakers speaking in 1 week, a lot of times that indicates chop is en route. Now, as far as actual economic events, events that are decent to trade on or expect at least some faster price movements on might be like consumer sentiment is not shabby, like it's not too bad. But yo, I ain't gonna lie, y'all. When I look at this, there's nothing that I really like out of this. So yeah, man, that's that. So unfortunately, not too much. Now let's get to the actual charts. Let's get to the actual charts. So so hold on, give me a second. Okay, my fault, y'all. So so here we are on DXY. So on DXY, last week we had a strong move down. When we came right next to our target, we like literally since down here, we've been talking about this target, and then we were looking at this red area for price to come into. We came so close, and price just didn't have enough, and then we made this strong move down. Now, this is the last bull case for me when it comes to DXY. DXY can use this to go higher. And once again, if you see DXY going higher, a lot of times that does show that there's um potential bearishness coming in NASDAQ or the S&P 500. So I like to look at DXY for that. Do I think what I drew here will happen? I actually don't. I kind of don't think this will happen. I'm just saying that this is a potential. Like this could happen. Okay, this could happen. Now, though this could happen. So now I'm gonna go ahead and delete that and say I think we're gonna make a move lower on DXY, but we may see a move higher first. So first of all, it could be choppy, or it could be a bit of a move up, but not enough to take us above buy side liquidity, which is the liquidity that's above. And then it could be a move to the downside. Okay, but in other words, I think there's bearishness coming in DXY, and I think there's bullishness coming in the Nasdaq and the S&P 500. We'll check those charts out. So something else that I use for sentiment outside of that is I like to look at like bonds. I like to look at bonds. And if you see here on bottom futures, so a little background knowledge here would say when it comes to the interest rates, we know that's a big factor affecting our economy right now. Like, hey, if they say the interest rates are expected to be higher, then that's not really good for stocks or businesses. So then you can expect investors to kind of take their money out if they're not expecting as much production out of them economically, right? But if interest rates are expected to go lower, then that's supposed to be pretty bullish for stocks. So when it comes to these bonds, right, this futures of the 10-year treasury note, right? So treasury bonds, this future right here, ZN, if they are bullish, right, meaning the prices are bullish, that means that there's an expectation that the interest rate should be going lower because they move inversely. So you got to follow what I'm saying here. The price of bonds going up, that means we have an expectation that the interest rate is going down. All right, so as you see here, even in the later parts of last week, you've seen bullishness coming in those last few days. As you've seen stocks pushing higher, right? Stocks had pushed higher on us last week. And so it's almost like if these prices are pushing higher, you can kind of say that you expect stocks to push higher. And even just to show you here that all charts are the same, all charts are the same. How do you know that? Well, look at this SIBI that we have, or look at this bearish veg that we have. Look how price stopped to the tick. Like it filtered out because this is an inefficiency right here. It filtered out and it stopped right there, bro. Understand? So there's no accident there. So I know that price action is this. As long as you have a chart, price action is gonna do what it do. Like I could describe every movement here and explain it with technical analysis. So it's the same thing. And when I look at this, I do have an expectation of higher prices coming on these treasury bonds, which is pointing to like lower interest rates, which is more bullish confluence for Nasdaq or SP 500 or other tickers across the market. So DXY potentially, my bad, I meant to stay here. DXY potentially going lower with the bonds prices pushing it higher. Um, so far, give me indication of potential bullishness in at least the short term, at least. Now, one bull case for DXY, which is a bear case for NASDAQ, once again, is if this does play out. Like my original arrow here, if this does play out, then you could watch out for that, right? You could watch out for that. But do I think that'll happen? No. And my reason, by the way, is that when we come this close to a target, there's no need to retrace this deeply to go back higher. So when I see us come this close, the line of defense was the one we were talking about the other week. If y'all remember this, we were looking at this. We were saying, hey, I want to see this take us to the red area. It tried, right? It tried so hard to take us to the red area. It struggled, but it didn't get quite there. And now we trading back down. So for me, I don't necessarily have an expectation that we're going to go back up there. I think we're going to start looking for sell side objectives. And so we'll start seeing bearish price on DXY. But at least we know the potential bull and potential bear case, which is what we always do as traders. You have to entertain both and then trade what you see at the end of the day. So I got a question that said, do I think Bitcoin will affect the bond market? No, I don't think Bitcoin will affect the bond market. I think the bond market will affect Bitcoin. So it's definitely a difference. The bond market will come primary. They're primary because ultimately it has to do with liquidity in the marketplace. And so if there's liquidity, as long as there's liquidity in the marketplace and people with a lot of money, people with money to spend on investments, meaning risk is on in the economy, then things like Bitcoin will skyrocket. Things like the NASDAQ or the SP 500 will skyrocket. And so that's all related to bonds, which is going to have to do with the availability of money for people and businesses, you know? So, but good question. And so we taught DXY. Oh, I meant to actually touch on, well, you know, for my Forex people in here, I won't go into detail on Forex tickets, but I do want to just say, like, you know, with me expecting like some bearish on DXY, you may see like bullishness on tickets such as like you got British pound. Like I expect some bullishness on them because, you know, that means that the British pound will be moving up while the dollar is moving down. So I do expect bullishness on them. You see they came into the bullish for value gap and they getting a nice little reaction here. I know it consolidated, but I do expect continuation. I think that if we were bearish, we wouldn't have come all the way up here. Like I don't think we're gonna come here to retrace. I think we'll just have continuation and move above buy side over here. So a new target for me here is this yellow line personally. So that's an intermediate term target for me on GBP, or on a pound dollar. But you see, we already had, if y'all remember Watchlist multiple weeks ago, we talked about price coming down, running out sell side down here, running out all of this sell side. They met their sell side objective. So this whole arrow played out. It met its sell side objective, and now it's time to go for buy side. Or it could be retracing to go lower. But my thing is, I don't think it's retracing to go lower. I actually think it's going to just make a push above buy side because when I look at the higher time frame charts, they give me bullish signals. So that's for GBP. Now, when it comes to the euro, same thing. I think euro is going to push higher as well. And for USD, JPY, I want to say that we were targeting this monthly SIBI, and there was some funky news around this currency. And then this is just me showing once again, y'all, that everything is based on the chart because price had rocketed, touched the 50% of our monthly SIBI. And then ever since then, it's been trading down, right? Ever since then, like that was the top, and then it's been trading down. And it's just to show, you can just see the precision here that is in the marketplace if you know what to look for. There's a level of precision you can get. I don't think it's coincidental that it stopped right there on the dime and traded back in the other direction. This can't be a coincidence every time. And there was some type of news event or something like that. I forgot what it was, but in that time period, there's some news coming out and all that. And this is why I say, if you just learn how to really read the chart the right way, you don't ever have to watch a news event One of the trades I had posted on my Instagram as I come in here to NASDAQ right now was this trade that occurred on FOMC day, I think it was. Where is at? Yeah, at FOMC, right? So boom. This is what I mean by, FOMC, Jerome Powell is speaking, right? He's speaking. Look how price came here to this 4-hour city, to the tick, like to the penny, and we reacted out of this thing. Like, come on, y'all. This can't be a coincidence every time. So this is a trade that I took on FOMC. And guess what? This is actually the first FOMC I didn't listen to the meeting. And I never listened to the meeting for my trades. I listened to the meeting because I've always been a nerd and I care about economics. But ultimately, my trades are never affected by anything that man says out his mouth. I just stare at the chart. So this time, I didn't listen to the meeting. I actually just traded the chart for real. And it just shows you just, like, you can see the precision. This is a 4-hour fair value gap. Price touched it to the exact tick and traded down while he was, this is all while he's speaking. So it's just like, you can't, like, I just want y'all to open your mind up to the fact that in a technology age and in an industry where there's so much money involved, you have to understand there will always be a level of corruption so that people who are in the know can make profit. Just open your mind up a little bit. But a lot of y'all who've been with me for a while have seen that, and I've already proven that. So boom. So price makes his move, comes back, runs sell side, cool. If y'all see this green wick had come under this red wick, cool, we run sell side. That's a sweep. Now we push to the upside, and now we pushing. So what's next? So what is next here? So it's funny because my most original analysis on this NASDAQ thing was this over here. So if y'all hold up, freaking Zoom is in the way, my bad. I'm trying to pull this up. So if y'all peep this here, this is my original analysis using this same weekly order block to take us back above all-time highs. And this was from something that is actually in the Discord on February 20th. Remember I said the only two scenarios I see happen on NQ Weekly. And I'm saying that this, and then I said, if we don't react to the first one, we'll definitely react to the second one. But this order block has been the target for a very long time. We've been staring at this because it's such a highly probable order block that I knew whenever price gets there, this order block should take us higher. And so far, this is this very same order block. That was from February 20th, y'all. February 20th. It is May 5th at the time of this recording. So you see, once we touched it, what has been going on? We've been pushing out of it. So I've had my doubts on this actually being the bottom. I was really second guessing myself, but now seeing how we've reacted out of it, I am starting to lean bullish again, which was what I originally thought would happen. But you know how it is at the time of the trade. Sometimes you kind of start second guessing, like, yo, am I right about that and everything? And it looks like this is the order block that's actually pushing us out. It was definitely a funky delivery because you see, we pushed up, then we had to move down all the way down to the bottom of this wick. Then we pushed up, and then we pushed all the way back down again. And here we go pushing up again. So understandably so, that's obviously a pretty tricky time period. And I don't think anybody is wrong. Let's say they had took some losses in here. I don't want y'all to feel bad taking losses in this consolidation. That's really, really tricky. But here we are. I do think we'll go higher, but I need us to close above this daily SIBI first. I think we will close above it, but I need to see that for me to then say, I believe we're going to end up going to all-time highs next. Because if we're bearish, this SIBI should work. Simply put, if we're bearish, this should work to take us down. If this doesn't work, price is telling us that it's probably not bearish. And of course, I could be wrong just like anybody else. So what will we do? We will always trade what we see. That is always the mantra here, y'all. We will trade what we see. We're simply talking probabilities here. Via probabilities from all the studies that we do, if we're bearish, this should take us back to the downside. If it doesn't, we're probably going to run all-time highs. It's really one of the above. All right. And so when I see the same thing here on S&P 500, this same SIBI was actually a very important one for downside. What did price do? It held it, right? Because anybody who's been with me for a while, y'all know it's all about bodies holding the fair value gap, not wicks. So I don't care about this little wick on the outside. We give price room to do that. But bodies was holding it. and we came to the downside. So it was looking promising. And then we pushed back up, closed above the blue area. And so now something we could look for is price potentially using this green candle here to take us back higher. Plus, as you see here on this yellow line, I said if we get a closure above 51.8975, if we get a closure above there, I will start targeting all-time highs. So right now I'm kind of on my hands, letting price talk to me, letting price whisper to me. But I do believe that we will see higher as long as we get a daily closure above 51.8975 on the S&P 500. So Rose says short term we may have a pullback and push through. Exactly, especially if we're expecting a green candle this week, which I personally expect. I expect a green weekly candle. So if I'm expecting a green weekly candle, I would expect some level of bearishness earlier in the week before a move higher. So I wouldn't be surprised to see some bearishness at first, like I said, maybe coming into this green candle a little bit more, but ultimately to take us to the upside. Okay, so that is an expectation for me this week. I lean bullish. It is not my most confident leaning bullish. Like, it's not like when we had this down move that we called out, I was extremely confident that we're going down this week, and we made a lot of money. Last week, consolidation. This week is decent. So I do think we're going to move higher, but especially with no news events this week and the fact that we are at the end of the day in the middle of a price leg. What price leg am I talking about? Follow my arrow. See this down move that we made? This down move? Yeah, we retraced and we're smack in the middle of it. So now that we're right in the middle of it, price can technically go either way for real. I'm just saying that I think it's going to go to the upside by the end of the week. All right, but you gotta open your mind to any possibility, because so you can make money regardless. But yeah, back to Nasdaq. Yeah, I'm expecting higher prices. Like I said, I think if we lose the lows of Friday, May 3rd, if we lose these Friday, May 3rd lows, I may start looking bearish again. But I don't think we're gonna lose the lows of Friday, May 3rd before we deliver higher. So we'll see. My eyes is definitely gonna be open to all those scenarios. Let me just see the 4 hour. Yeah, everything is kind of telling me, everything is like having me leaning bullish right now. So ultimately, how do you guys know how to maintain sentiment or not? You want to make sure that you understand things that price typically goes higher off of. So for example, something price tends to go higher off of would be a bullish fair value gap, right? So if you see one on a higher time frame such as this one, this is a line of defense for us. So if price were to come into this purple area, then you would want to see price uses to go higher. Now, if price comes in here and doesn't go higher off of it, and you see a 4-hour closure under this purple area, then you should start opening your mind up to, hey, hold on, maybe we're not as bullish as I thought. And then you might have another line of defense that you might want to try. And there's so much lessons in between what I'm saying. I'm trying to give the most rough draft example of what I mean, but you might say, hey, let's look at this one. We got another 4-hour fair value gap. So you say, I'm gonna give it another chance here. If you don't see confirmation, meaning price giving you, let's say, bullish fair value gaps out of the area, and then respecting those same fair value gaps and making more, that's a level of confirmation for us. If you don't see things like that coming out of the area, then it's probably gonna get traded through. And then now that you got like these invalidated, price is talking to you, yo. You gotta listen up. When price starts talking to you like that, you gotta listen up, because it's telling you, oh, now we going for these lows. And if we go for these lows, trust me, we're going for these lows right here. And if we're going for those lows, I don't see price coming down here not to run these lows. You see what I'm saying? So that's really what it is. You take it step by step, and we call those low-hanging fruit objectives. So let's say even right now, if we make a down move, then you can say, hey, I think price is targeting this purple area. All right. So you can literally place sells into that. And then you'll see, are we getting confirmation of using it? Let's say we close under 50%. And you're like, I don't think price wants to actually use this purple area. All right, now you have more targets. Hey, let's target these lows down here. Just very easy. Make trading very simple, because there's a lot of money to be made between, even from, let's say, 17,825 to 17,740. What was that? 85 points. 85 points on Nasdaq. especially with the right amount of contracts, could pay for your month. You feel what I'm saying? So I'm not saying to over leverage, don't get me wrong, but please understand my point. At the end of the day, there's money to be made even on little moves. So yeah, at the end of the day, we can make these intermediate term projections, but ultimately I don't live and die by them personally, because at the end of the day, I'm always going to be confirming everything using multi-time frame analysis. So even when I say, yo, if we bearish, we should go bearish over this daily SIBI right here that we just came into. Which you see Friday, by the way, we came to the 50% of it and stopped right there. I don't think that's coincidental. But anyways, so now if we coming in here, right, what I want to see lower time frames giving me a level of confirmation that we actually want to go bearish off of that. So the first two red candles ain't enough for me to say, yo, we going to use this area. Like, nah, price has to deliver in a certain manner. I would like to see bearish fair value gaps coming out of this area. And some of them things I want to remain open. Some of them I want to tap into it at a certain percentage, and more and more and more. All these type of concepts that we obviously cover in the mentorship, which is how we get confirmation that price actually wants to use certain areas. But that's what it looks like. So don't ever live and die by, I think price going higher this week, I'm looking at it on Sunday, let price confirm it on lower time frames, because when we're bullish, y'all, bullish tools or bullish PD arrays will work. It's really that simple. When you're bullish things will work. When you're bearish things will work. Keep trading simple and stop using, let's say we're in this price leg right here and there was like a freaking bearish order block from July 2022. Let's say we clearly prove bullishness here, a bunch of bullish fair value gaps, everything, price coming to here, and y'all gonna tell me, yo, there's a bearish fair value gap or there's a bearish order block from 2022. This has nothing to do with our current order flow. So please stop trying to use tools or PD arrays from out of context that have nothing to do with what's going on right now. That is my biggest pet peeve, and you guys might hear me repeat that 1,000 times in your time with me, because it is such a terrible mistake. And that's why people come into this stuff and they say, hey man, I know what an order block look like, I know what a fair value gap look like, but my chart is busy. Like, I'm charting every fair value gap, every order block, every this, that, and the third. And the reason you're doing that is because you don't understand context. There's only certain things that are important at a time. Like right now, the important thing is this daily SIBI. If this doesn't work, nothing else to me is really important until we get to all-time highs, at least not on the daily time frame. So I'm only marking out the important things. That's it. Ms. Reese said, if this, then that statements help create both a bullish and bearish scenario. Yeah. That's what I really trade off of for real. It's like if then statements. If we reject this, then we go for these lows. If we don't reject this, then we go for these highs. Like, you know what I'm saying? Let's keep trading simple. But let me not rant too much though. There's certain like rants I go on. Those is one of them. So forgive me, y'all. Please forgive me. So let's move on. Let's move on. So here we go with YM. Here we go with YM, man. We targeted this monthly BTSMC here on the Dow Jones. This was a target to the downside. Look how price delivered and look at the reaction we've been getting. And this is why I say, man, you have to respect your targets, because when price meets an objective, such as tapping into a monthly fair value gap, you have to watch and see what happens next. Look how price started trading up. Last week was tricky. Last week was definitely tricky, but we've been bullish ever since touching our target. It's time for a new objective. So something that was important to us is saying, all right, what will we do when we come into this weekly bearish fair value gap? What did price do? It touched it. It traded down at first, and then it traded right back up. And look how bodies closed exactly on it. Once again, is this a coincidence that the bodies of last week's candle stopped at the exact tick of where this fair value gap was created? You can see it stopped right on the dime. That is not a coincidence, people, by the way. But anyways, back to the topic. So price is showing you a level of bullishness here. So for me here on the Dow Jones, I do expect higher prices, especially because we are coming off of a monthly bullish fair value gap to the upside. So you see that I'm expecting bullish prices going forward. Our bearish, something that the bears would have wanted to use to go lower was this SIBI. And it went lower at first, but it didn't complete the objective. So the bears just got invalidated as we're now looking like we're gonna have bodies over this fair value gap. And so now to me, my eyes point just simply higher. There's some low hanging fruit objectives, like you can just go for these highs right here, and just take it a step at a time. You can just literally look for these highs at like 39, 354, you know. But so for me, I believe every dip will get bought until we hit those targets. But there's levels to that, because once again, if we're bullish things will hold. So for me, for example, I don't think I want to see the Dow come under the Friday's lows. Yeah, I wouldn't want to see Dow come under Friday's lows. So yeah, certain things I want to still see hold to get me to that objective up here. But ultimately, looking at the daily, I think we'll push higher. So you still want to build a story. And for anybody that's new here, 'cause I know I always have new members every week that's coming in. What we do is like, yeah, we go through a watch list, but we teach, because at BTSMC, it's about learning to be self-sufficient and profitable on your own. And then now that you know how to trade for it on your own, you don't need anybody else, then these watches become a level of confluence. Like my mentees, I feel at this point just use me for confluence, that they don't really need me to tell them what's going to happen. A lot of times we agree, for real, and y'all can low-key see it through like the chart debates. Anybody that's in the community and the chart debates, y'all see every week my mentees is getting it all right, like every week. So they clearly know this stuff without me. I'm here giving y'all all the same chart debates, and you see they getting it right. So they know this stuff without me, because they've now reached a point where they can do this on their own. So that's always the goal here. So watch list is cool for like direction, but ultimately I want y'all to learn why we say what we say. So now here we are, the monthly time frame on the Russell. So you see this purple area, it says this is a bullish fair value gap that we targeted on the Russell with B adjust on TradingView. If you look at the bottom right, it says B-ADJ. This has to do with certain contract changes that occur on these continuous charts on futures. I know some people don't know anything I'm talking about right now, but just know you could toggle it on and off. So watch, I'm gonna press it, and you're gonna see that price actually touched this bullish fair value gap here, and that's what we're going higher off of so far. Touched it, bullish reaction. You see the wick, green candle. You see we pushing up. We've been bullish ever since. So with B adjust on, we tapped into it. With B adjust off, it looks like price missed it, right? It looked like we didn't actually, because it would be down here. It would have been down there somewhere. So it looks like we just missed it, but we did with B adjust on. That's what we was using when we charted it. When you don't have B adjust on, this just looks like this is what we call a wick order block right here. We go over that in the mentorship, and you see like with this being a wick order block here, you see we came to just about the 50% of it. Once again, that's no coincidence. So whether B adjust is on or not, we have a technical explanation for what's going on. So ever since we hit the wick OB or the monthly BTSMC, I don't care how you see it, we've been pushing higher, and I do expect continuation. To me, if we were going to go lower, we should not be back into this fair value gap. So this fair value gap right here, I don't think this fair value gap will send us back to the downside. It can give us a baby reaction, but I think we're gonna end up pushing higher. So, and yeah, ultimately, a BTSMC is a fair value. Yeah. So that's that. And so we pushing higher right now. And I expect more bullishness on the Russell. So Russell, I'm bullish on it. I'm looking for price to let's look at the higher time frame for a second. Yeah, I mean, ultimately, I ain't gonna lie, y'all. I'm talking to these highs on the Russell. I'm talking in the weekly highs that we came from. Real talk. So yeah, that's that. That's that on the Russ. Got a lot of Russ. I want to talk about copper for a second. Nobody want to talk about copper. We like to look at other tickers and options people. I know I'm coming to you. This is just a futures thing. Everything I talked about so far could be applied to options. The Russell, y'all have an equivalent for that. Y'all have an equivalent for the Dow Jones, the NASDAQ, the SP 500, DXY. Everybody should be looking at DXY. I don't care what market you look at. But this is future specific real quick for copper's future. So let me just say this really quick, but learn from the analysis. I just want to show you guys price always has an objective. So we had a weekly RB here and this is kind of for my mentees. We had charted this post mod. If you in here, you might remember asking me about copper in our class, and I said, yo, I want to see what we do as RB. Look how we have rejected it 50%. And ever since then, bro, we traded down. And yeah, you remember this, right? Yep. And then, so now we came into our bullish line of defense. If price is bullish, it will use this area to run back these highs and close above the RB. If we're bullish, that will happen. All right. If we're bearish, if we get a body under this, then I expect more downside on copper. So for me, right now, I like the reaction we're seeing here. You can see it's a pretty nice reaction too. And this is what I mean by confirmation, y'all. Like, so notice we come into our POI and then we create a bullish fair value gap. So if you guys could see it, we created one right there with this light purple rectangle. We created it. What did price do here? We had opened up, traded. Actually, let's look at that on lower time frame. What do? We traded down, came into it, touched 50% of it, and then we popped out of it. And ever since, we've been bullish. So things like those confirm direction to me when I see that, because what does that tell me? That tells me that bullish tools or bullish PD arrays are working. So for me, that's a level of confirmation that I'm in the right direction. And then you could start targeting bullish targets like these highs up here, right? These 4-hour highs, you can start targeting things like those because prices are already proven to you that there's a level of bullishness in this ticker. So I would expect continuation to the upside here. But no matter what, of course, you never marry direction. If we don't run these highs and we start to come down with bearish fair value gaps, then I would start targeting these lows. It's like, let's keep trading simple is the whole point always. Yeah, I agree. Postmodern is looking good for upside. Yep, exactly. We're gonna just adjust on the fly, as you said. So that's that. Now CL is another one. So we've been vocal about CL in here. Every week we come in here and chart this. So basically, we said that if we don't use this nearby fair value gap right here to take us higher, then we expect price to come into this area, and then we'll see what happens next. It didn't take us higher, right? This is the if-then statement we were talking about, y'all. And let me draw it real quick because I know not everybody was here week to week. So we're looking at this area to continue to hold price as it was. And this is a learning moment. So price is holding it, and you have to, the thing is, when we're bullish, price doesn't meander around its tools or its PD arrays when it's this close to liquidity. So being that we wanted price to come into this red area, which is institutional liquidity up in here in this red area. So we're looking for price to come into that. When it tapped into this, it should have flew away. So when it came back down, my fault. Let me do this with arrows. Okay. So it gets created. This candle opens up right here, taps into it, comes up. We're at the red candle now, right? What happened after the red candle? We came down, then we came up, then we came down, then we came up, and we came down. So it's like, okay, what is price doing? When does price do this? Price doesn't do this when it's this close to liquidity for real. That's a very bad sign. And we talked about that one time in the SMC chat in the free Discord. We talked about this one time when we were looking to see, hey, if price uses this fair value gap, we're gonna run sell side. Y'all might remember what I'm talking about. And I was like, yo, I don't like when price consolidates right next to liquidity like this. What did it do? And then what happened? It ended up being a reversal. So this is the same scenario right here. We right next to institutional liquidity. We started consolidating. That's not a good sign. Doesn't usually. This is what I call signatures in price action. Just signatures. So we consolidated right here. That's not a good sign. What happens? We trade down. Cool. If price is gonna go higher, daily bodies will hold this area right here. Oh, my phone. Let me turn B adjust back on. Okay. So when B adjust is on, you see it looks like this, right? All right. So this is what we were charting. So now, and then this should slide down a little bit right there. There we go. So anyways, guys, we're looking at this purple area. What will happen? What did price do when it tapped into it at first? We came and we rallied up out of there. So let me erase this. We don't need that no more. We came, we rallied hard, but it didn't hold. It didn't hold. It made equal highs with this, and then we traded back down. That's not a good sign. This was a horrible sign for more upside. So when I seen this happen, I was like, oh, hold on. Not a good sign, but we have to be patient. Price consolidates, bodies are still holding it. If we go back to the daily, and let me be clear about these fair value gaps. Let's be clear about these fair value gaps. If this is a daily fair value gap that we're looking for price to go higher on, and you got it from the daily time frame, you're looking to see if daily candles bodies will hold this area. So I don't care if there's an hourly closure under it, because if the daily is still holding it, it's still valid. Okay, so as long as the daily is holding this, it's valid. So daily is still holding is good, but then we come up, rejected the CE with bodies, and then we traded on down. And so now we look for lower. Now, when I seen the first line of defense get traded through, this get traded through, at this point, sell side is imminent. So I said that in our watch, I said, if we don't hold this area, target these lows. Anybody who targeted those lows made money. I traded this candle. I made money when we ran these lows. Cool. Low hanging fruit objectives, right? Now we run these lows. This is a target. Do I expect this to send us higher? Heck no. Think of it like this. If we were this close to liquidity up here and we didn't use this one to go higher, okay, that failed us. Let's try another one. We come down to a discount BTC, trying to use that to go higher. That failed us, right? Okay, why the heck will we use this one down here out of context, officially out of context, to take us higher? So just because you see a fair value gap doesn't mean that you're going to be using it to go higher off of them. Some of them are just literally targets. So if we're running these lows, I would just simply target the purple area, because I highly doubt we're going to run these red lows without coming into this fair value gap. Do I think this is going to send us higher? No. Could we get a reaction? Let's check it out. Yes, right? We could get a reaction. You see this green price leg? Yes, we could get a reaction. Do we expect that reaction to hold? Ultimately, no. Because what does price do? Price ends up coming into the bearish fair value gap. Bodies holding under 50%, and we start rejecting. And now bearish things are still working for us. So that's what I mean by taking things out of context. It's like the only fair value gaps, or the only tools that were valid in this area for bullishness, was the nearby one right here, this one down here. If either of these didn't work at this point, you need to start listening to what price action is telling you. Yo, we're bearish now. And so when it comes to CL, I'm personally expecting like lower prices, and I'm using the monthly for this. So when I look at the monthly, I see that price, I know this monthly candle has a lot of time in it still, right? So who knows, this could end up being a huge wick, but low key, the month of May right now is kind of, it's looking pretty bearish, I would say, so far. So this monthly fair value gap right here, that is not working so far. We'll see if bodies hold it on the monthly. We'll see, but that's a long way away. So I would say just a short-term target for me is just looking for the monthly lows of March. Being that we're in March's candle, I'm looking for the monthly lows of March, which B adjust made this thing go up again. Okay, so when B adjust is on, I guess it's 75.87. That's mad weird. Hold on. Yeah, that's frustrating. So I'll just call it out, right? Whether B adjust is on or not, look for the lows of March. Okay, the lows of March would be what I'm targeting next on CL. So I would expect bearish things to hold until we run the lows of March, basically. So I wouldn't want to see, for example, a daily closure over this daily fair value gap on the downside. This SIBI, I wouldn't want to see a daily closure above this if the expectation is to come down here. So as long as we don't close above this, I remain bearish on CL into that 75.87 level. That's all it is. Okay. And Ro put a light bulb in. That's fire. I really hope that, all it takes is even just one sentence, so especially while I get to the next ticker, I'll say another quick spiel, right? Like when we go through these things, some people know a lot of what I'm talking about and some people don't. But for the people that are really experienced with some of the stuff that I talk about, as y'all may know, bro, all it takes is one sentence that can make you money. Just think about that. One sentence could just make money for you. So like, I feel like it's always good to tune in to people with a level of knowledge, because you never know what you might hear that'll make all the difference. So like at this point in my trading career right now, I'm gonna be real, y'all. I don't listen to anybody at all. Like I don't get analysis from nobody. I don't even the people that I look to for mentorship when I was coming up. At this point, I don't even really trust what they say if it doesn't align with mine. As crazy as that is, because at this point I have my own discoveries and I'm doing many things my own way and it's been working for me very well. And I'm obsessive over these charts. I didn't put my own respective time in. And so, but I still might tune into what they say just in case. Literally just in case. I might need one sentence. That's all it takes. So I think it's always good to tap in with people that you respect, that have a, especially when they trade a similar style to you or a style you're looking to trade. Check them out, and you never know, you might take one takeaway. So anywho, here we are on gold. On gold, we were talking about price coming in. My mentees might remember this because we were looking at this live one day. We said this weekly BTSMC right here. We'll see if price can go higher off of it. This is a line of defense. We tapped into it, and we literally stayed still. We have been staying still. So, you know, it's kind of a tough spot on gold. I wouldn't say gold is a ticket that I will be trying to trade right now because you might get caught in chop before it makes a move. But I would say in the absolute short term, I do expect higher prices on gold. In the absolute short term, I do expect higher prices on gold, especially after witnessing this sweep. It's just that since that sweep, I don't like the reaction out of it. Like we swept, right? We swept these lows. What I mean by sweep, guys, is when you pretty much come under lows. After you come under some lows like these, you don't accelerate to the downside. It's like you literally, y'all ever seen market makers come and take your stop and then go in the direction you was already thinking? So that's those are the worst feelings as traders, right? Don't y'all hate that when they take your stop loss and then they still go the direction you was originally saying? You're like, what the heck? That's a sweep. So that's this right here to where they just swept these lows and we looking to push higher. And when we do that though, I expect fair value gaps. So that's why I say I don't like how we swept these and we not making bullish fair value gaps to the upside. Like, look, it's been a choppy, ugly move up. So that's not, when I look at that, to me, the bullish delivery on this sequence is not favorable. The bearish delivery is also not favorable because why are we not leaving bearish fair value gaps under these lows? So that's why I say, hold on. When I take a step back, I say, okay, so bullish was not favorable. Bearish stuff was not favorable. What are we probably in? Consolidation. We're probably in some chop. So that's why I say, to me, I wouldn't really trade this until price gets energetic in either direction. But if I had to put my money on it, I would probably say that I expect higher prices out of this bullish fair value gap. I would expect out of this weekly bullish fair value gap, I would expect higher prices. So just wait for price to get energetic on that. Now for SPY, let me go to SPY real quick. So shout out my options people. I trade both in case I don't know me. I trade both of these things. For SPY, I will be looking for this gap to hold as a level of support for higher prices. If we get a closure under this gap right here, then I might start looking into lower prices. But as long as daily bodies are respecting, honestly, I would say this. What is this close at? 505.03. All right, so as long as daily bodies are holding 505.03, then I expect higher prices on SPY. As long as daily bodies are respecting 505.03, then I expect higher prices. And for QQQ, same vibes. I'm looking for this gap to either not get traded to, which would be beautiful. Like if this gap does not get traded to, y'all, that would be such a great signature for some really nice higher prices coming. But if it does get traded to, I want to see especially the upper half of it get held for higher prices. But if anything, just ultimately, I want daily bodies to hold 426.90. So 426.90 here on QQQ. So the goal is for both QQQ and SPY. This gap should ultimately, hopefully not get traded to, but if it does, daily bodies got to hold it for me to remain bullish on it. But if we get daily bodies under, you know, like this yellow line, for example, then I would start targeting these lows and I would start targeting all these lows, honestly, most likely. So yeah, Rose said massive gaps above and below. Exactly. There's definitely gaps above and below. And for me, I know, you know, a lot of people teach us, especially when you first come into trading, like, yo, all gaps get filled and stuff. but it's just not true. Like a lot of gaps don't get filled, especially not in the short term. So a lot of gaps I actually prefer not to get filled because they really give you a level of sentiment to a strong at a strong degree. For example, if we were to just continue right here, this gap right here, I would love for this to never get traded back to before we run these highs. So it's like if we don't trade back here before we run the all-time highs, that is, I'm telling y'all, that is a beautiful signature of like, yeah, like real bullishness, real talk. You feel me? So, and you said there's more liquidity below. I'm reading the comments for people watching on YouTube. You know, we do this on Zoom. So if you want to get with us, definitely check the link in the description so you can join a free community. But in the chat, I see somebody say like, hey, you know, there's more liquidity below and stuff. But to be honest, for me, I think there's a lot of liquidity on both sides. We've engineered a lot. In this consolidation, we engineered a lot of sell side. We've also engineered a lot of buy side in the consolidation from before. So there's liquidity on both sides. And so what you have to do when you see a lot of liquidity on both sides, because you can make a strong case for both. Hey, there's a lot of liquidity down below, so we might go bearish. But I can say, yo, there's a lot of liquidity above, so we might go bearish. I might go bullish, my fault. So what you do is you look at signatures in price action. Those signatures are, a lot of my mentorship is based on the different signatures in price action. The stuff, the little things that nobody know about or like barely anybody know about, that's a huge part of my trading. There's a lot of little signatures that price typically does when you just look at a probability basis. Nothing's 100% in trading, period. But on a probability basis, when this, that, and the third occurs, usually you're expecting bullishness. So those signatures is really a large part of what we do. So what you want to do is watch certain signatures and you'll say, okay, all the bullish signatures are holding. So then you know, okay, we're going to go for buy side liquidity. That's how it goes. Yeah, exactly. And that's why I mentioned that price row. And Miss Reedy said, do the category of gaps go in a certain order? I'm not sure what you mean by do the category of gaps go in a certain order, but I do trade different types of gaps. And you know, that's a whole topic in itself. Maybe we'll do a class in that one day in itself. But let's go to IWM because I don't want to keep everybody too long. So like, let's go to IWM real quick. So once again, just showing everybody like objectives. We targeted the weekly lowest body. What happened when we hit our target, y'all? What happened when we hit our target? So you know, as soon as we hit our target, we rallied. Then we used this inefficiency right here as a level of support for higher prices. Price came to about the 50% of it, pushed out. I don't like this push down. This was tricky. This would have tricked me if I saw this live action, because I was not looking at IWM. If I witnessed this live action, to me, I would have targeted the lows. So this here is tricky. It would have made me lose money if I was trading it, because after seeing us come back down like this, based on the same signatures I be talking about, you would expect us to run this yellow line at 193.75. You would have expected that. So when that didn't happen, I would have took a loss, because that's not typical. That's why I say nothing is 100%. We just trade high probabilities. And so this is one of the minor occurrences. This doesn't usually happen. We wouldn't usually come down this hard to go up. But as you can see, that's what consolidation is about. The engineering liquidity on both sides. Now, could I explain what price bounced off of here? Yes, absolutely. This is an RB in itself. It bounced off the RB. I just wouldn't have expected that. Because after we bounce here, I would expect just continuation. There's no need to come back down here to go up there, but price doing what price do. And guess what? You're going to end up just adjusting and making money anyway. So now for IWM, I expect higher prices just like I did for Russell. So I don't think that this weekly fair value gap will take us to the downside. I think we're going to end up trading above it. I think we will end up trading above it, but I'm open to both probabilities or possibilities rather. Okay. Miss Reese, that's like kind of a mentorship thing. Sorry, I'm trying to talk to everybody in here. Like I try to talk to my mentees, I try to talk to people in the free community, I talk to people on YouTube. And so yeah, I try to get that information. So I'm trying to talk to everybody because everybody's in here at the same time. So my fault. But that was it. So that's actually the last one I want to go over as far as indices was IWM. Now, does anybody have any stock tickers? I'll take like maybe like 2 or 3 real quick. because I don't want to make this too long. And maybe when I stop recording, I'll take some more. But definitely for the recording, I'll take like 2 or 3 like recommendations. Anybody requests. So Rose said Apple. Let's check out Apple. I was actually looking at Apple, so that's good you said that. And then I got GRMN. That's a new one, Mr. Jarvis. So I'm definitely excited to see what that one look like. I never seen that ticker before. So let's see Apple. So Apple for me, when I was looking at the monthly, I said that if we lose these lows, there's a high chance we could come into this monthly fair value gap as a next target. But if you listen to everything I say when we come in here and we teach, or when we come in here and I teach, I always say you want to see what price is doing at lows and at highs. So why did I not swing Apple to the downside here personally? And we're not here on an everyday basis, so you guys might not get certain updates. But once we ran these lows, if we were going to be bearish on Apple still, we would have 1,000% used this to go lower. I will give you room to trade into right here. That is it. Nothing higher than this. Once price didn't use this to go lower, so we consolidated here for a second. Then we close above this. At this point, Apple is talking to you and saying, hey, I know you want more downside, but that's not coming. That's not coming. All right. So now Apple gives us a signature. This is one of the signatures I was talking about that we go over in the mentorship. It's like knowing but like watching very specific things. So my mentees know what I'm pointing to when I drew those things. Some people that are not my mentees might still know what I'm talking about, but I'm trying to talk to everybody. It's my mentees. Y'all seen this signature didn't hold in here, mentees, for further downside. So now we expect Apple to make a high move. That's why I left Apple alone. And then next thing you know, earnings shows us that we were really bullish, like even more bullish than, just coming into these highs. Like, nah, we went crazy. So now let's zoom out again. And now mentees, you guys may see why now I am targeting higher prices on Apple, even coming into at least like 187-ish as a super short-term target, coming into 187 for me. But I do think it's gonna end up going higher. So I know Friday, what is that? Friday? Yeah, Friday we had a red day on it. Not a red day. They gapped up on earnings, as y'all can see, but as soon as price opened up, it started trading down. That's okay, and that's very healthy. That doesn't mean we about to fill in this gap. I don't think Apple will fill this gap in. If it were to fill in the whole gap, then I will become bearish on Apple. So I think that Apple is gonna just fill in some of this gap, probably 50% of it. So what you could look at is you could draw from the high of Thursday. You could take that and draw it to the opening price of Friday. And then you could see where 50% is on it and say, all right, if price is kind of holding this overall top area, then I like Apple making a continued move higher into, like I said, like the 187s and even higher for real. 187 for me is a low-hanging fruit objective, but I do ultimately think Apple's gonna go higher than that. I'm just trying to play it safe. So Apple, I am expecting bullishness on it. Like I said, I want to see the top half of the gap hold, and then yeah, we'll see continuation. So in my opinion, I think that it's higher prices. Yeah, like Rose said, it got swept and held. Exactly. This is the definition of a sweep, and this is what a sweep should look like. Once we sweep, you want to see this push out. You see this inefficiency. Anybody knows this inefficiency? You see what happened here. We got it. You got the inefficiency. This is picture perfect on what a sweep should look like. So with that being said, I'm expecting higher on Apple. So good. You said it's Garmin. I'm not familiar with Garmin. Let me see. Yeah, I'm not familiar with this one, y'all. And as I can see, I've never charted on it, right? Yeah, I've never charted on this. Anybody want to tell me what they do? All right, well, I mean, I see a telecommunications equipment. I don't know, y'all. Not familiar. GPS, okay. GPS, heard it. GPS products, thank y'all. Oh, I know what y'all talking about. Facts, Garmin. I recognize the name. That's a fact. That's a fact. I do recognize that. Yeah, they stock is all right. What the heck? They stock is pushing. They stock is pushing. That's dope. Who would have thought? Who would have thunk? All right, so boom, let's go to the monthly right quick. So we here on the monthly. That's how we always start. And I'll try to talk all my thoughts out right now. So what I do is I come to the monthly. I like to start at the high time frame because it gives me the best direction. So here we go. We got a monthly chart. I'm looking at these monthly highs over here. Because a monthly to me definitely looks like it wants to make a move higher. Postmaster said they made his GPS satellite text device for hiking, and it works great. Good to see they doing good things. I like it. I like it. So here, right, when we come this close to liquidity, I know this is a monthly time frame, so this is kind of a ways away, but I don't expect deep retracements before moving higher. Like, we should remain pretty strongly bullish into this yellow line, as you kind of see here. Did they have earnings or something? It's a pretty crazy candle. Okay, they did. No wonder. Word. Okay. Yeah. I mean, it's just funny because like the chart kind of showing you that we're gonna be pushing up here before earnings even did that. But anywho, so boom, what we saying? So yeah, now that the monthly's telling us to stay higher, what we do is we come to the weekly and make sure that the weekly is kind of in agreement with the monthly direction. And when I look at the weekly, I don't see anything to the left here that should be stopping us from getting up here. Now let me make a quick point again on why I don't like when people try to use like order blocks from too far away out of context. Some people try to call this an order block. Like, yo, there's an order block on the weekly, boom, boom. It just got traded through. Why? Because this is irrelevant. Never look at this as an order block. Like, just stop doing this. Take this out of your trading. It is the worst thing you could do. I'm not gonna go on another rant. I'm trying so hard, but I'm sick of it. I'm so sick of it. Stop it. This is not an order block you should ever look at. It has nothing to do with our current order flow. Focus on what's going on right here. No, stop. Don't work like that. Anywho, so I don't see anything here stopping us from getting all-time highs on a weekly time frame. I like how this weekly looks in itself. This is really strong. So let's see the daily. If we have a draw coming into this yellow line, certain things we're gonna want to see hold. Like, I don't think price will come into this gap, but if it does, it should hold that gap. It should hold that gap to get us to the yellow if it were to retrace this low, but I don't think it will, and I don't expect it to. I think we're gonna stay bullish into the yellow line. So let's look at the 4-hour. I mean, this is just a big gap up on earnings and all that, but this is such a large area. But ultimately, I think we should hold, especially the upper half of this green candle, to continue with some continuations to the yellow line. Just trying to scan time frames and see what can happen. Like, only thing that could happen on the downside, there could potentially be a sweep of this buildup. We could sweep this before moving higher, but it literally does not have to happen. I am only looking for bullish things on Garmin. Yeah, I'm only looking for bullish things on them in the intermediate term. But ultimately, I just like to scan time frames and make sure that everybody's in agreement. So just to quickly recap that, monthly direction telling us target these highs, at least the highest body of the swing point, at least. Okay, cool. Bullish there. When I go to the weekly, I'm saying, yo, does the weekly give me bullish signals as well? I'm like, yeah, it does. Okay, well, if we're going to remain bullish, what could we use on this weekly time frame to keep us bullish? Well, I don't think it will happen, but potentially a weekly candle could come into this order block. These red candles become an order block, all three of them. We could come into this order block, especially the upper half of this area, and then it could take us to the yellow. So that's a weekly scenario. So that's something I would draw out. Hey, if price comes into here, then I could potentially see price making a move into the yellow. Now, based on the fact that we're so close to our target, do I think price will retrace down here to, like, let's say 150, just to go back to 178 when we're already at 165? No, I don't expect that. So that's why I say I think this gap should remain open ultimately until we get to this yellow line. Once we get to the yellow, anything can happen. We come here, come down, come back up. All of that stuff can happen because that's a target. But until we get to this target, I think we remain bullish. So now it's just like, okay, well, if we're trying to get to the yellow, what could we use to get to the yellow? Like, what trade can we take off of it? This is kind of a tricky scenario because it's such a big, green candle. There's not really too much to like take a trade on per se. It's so impulsive. The move has already began. It's like you almost, to me, I wouldn't trade this because it's already far gone. Because even right here, price is permissible to consolidate right here. before its next big move. So I'm not a fan of getting in now, but I'm just saying for learning purposes, now you may say, hey, what can we go higher off of? Well, we may go higher off of the upper half, the upper half of this. May go higher off the upper half of this area. So we could use this to push us higher into the yellow. So when price gets into this area, or if price gets into this area rather, as you see, there's a sell side buildup here, so we can sweep that. So let's say price were to come on down. Once we get in here, now all of a sudden you start seeing, oh, bullish for value gaps. Oh shoot, oh, structural shifts. Oh snap, every closing of an ITH, all types of stuff going on. Now you see that, okay, that's confirmation. Now you could get involved somewhere here. You could get involved, and you know that price is gonna follow the monthly/weekly direction we had talked about. That's why you go to the higher time frames, because you might want to take profit early. Let's say you ran these highs. You want to take profit early because you're like, oh shoot, I ran the highs, it's lit, I'm good. There's nothing wrong with that. It's okay to take partials. But what I'm saying is, you don't have to necessarily take profits there if you have time on your contracts, because the weekly and monthly already told you that we're going to the yellow line. So you can hold trades a little longer when you use higher time frames as your basis, because price typically respects the higher time frame direction if you're reading the chart correctly. Now, here's the secret to trading. And I'm gonna like close the recording on this point. It's like the secret to trading is the fact that, get this, nobody is perfect, right? So you're gonna be wrong sometimes. Ain't that crazy? Ain't that like a news flash? You're gonna be wrong sometimes. So sometimes you're gonna say, I think a monthly is supposed to come to this yellow line, and price gonna mess around and do this. You know what I'm saying? And you're gonna be like, dang, I should have took profit at these highs. Yep. That's why you won. Take partials. Always get to take profits at intermediate term objective. Take profits at like low hanging fruit objectives. So it's okay to take some profits off, but I think you should leave runners for your higher time frame target. Leave runners for that joint. Also, trading skills is to always size correctly and appropriately. You should never be losing your account on any given play. So you got to understand, y'all, as much as you can learn about these charts, at the end of the day, the greatest skill you can have is knowing how to trade. Yeah, what do you mean by that? Like, I thought how to trade has to do with charts. No, there's a way you can be an expert at reading charts. You can be an expert at trading. When you're expert at both, oh yeah, you about to make a lot of money. But there's people who are actually great traders, but they can't read charts well. Why? Because great traders manage emotions and they manage risk. So if you can manage emotions and risk extremely well, all you got to do is learn technicals for real, and then you're going to change your life in a crazy way, like in a crazy way. But imagine you just learned charts, but you didn't learn how to trade. You're still going to be a non-profitable trader or unprofitable. You're going to be unprofitable because you just know a lot of charts, but because you oversize or you revenge trade, you don't know how to get off the computer. You trade it in chop, knowing that it's not favorable for you. Just letting your emotions get the best of you. You're going to always have a break-even account or a red account. I'm telling you. So you have to still master your emotional discipline and your risk management no matter what. So yes, we may say, the monthly tells us yellow line. That's a technical analysis. But what if it don't get to the yellow line and price shows you bad signatures? So, bullish for value gap, bullish for value gap, respect the boom, bearish for value gap. Whoa. Respects the bearish one, makes another bearish one. Price is talking to you, telling you, yo, we're bearish now. If you're emotional, you can be like, nah, I'm holding on to this. You letting your emotions take over. And so now you made a winning trade turn into a losing one because you're not even paying attention to the chart no more. You're too in your head. You're too like emotionally tied to the trade. So you're not trading like a robot. Therefore, you're lacking trading skills. So you're not even when you lack trading skills, you don't even pay attention to your chart skills anyways. So that's all it is. Rose said bat 0.5 and manage risk. Real talk. Let's tattoo that on our brain in itself. You know what I mean? It doesn't always have to be a home run. Just manage your risk and keep low hanging fruit objectives and just gradually build your account. All right. But if you're watching this on YouTube, definitely hit the link in the description, because that's how you can get us a free community. So you can ask questions, write comments and hear everything, make ticket requests. We also do analysis all the time in the chat. We everything. We be getting into it. So definitely hit that link in the description and subscribe to the channel as well. And that's all she wrote.